Out here.
All right. All right. Now we got Lee's. We'll come back to this recording. We got Lee's screen, and he's going to walk through a couple questions. Are you going to go through George's questions?
Yeah, I'll do my best. It's not an easy question to answer, but they're the best ones. I'll give it a go. Okay, so what we can do as well, Sierra Chart has study collections, and we put a set of study collections together, which you get when you download the indicators, and it puts some quick start templates in place. So one of them gives us a basic footprint in the style of the edge room. Just going to get a bit less data in this chart. 5 days is enough on a full tick reversal. Here we go. So here's my footprint that looks like the room. So once you've downloaded the edge zones, you can just hit that from here. We call it Emoji Trading Basic Footprint Edge Style. And then we've put some simple templates of edge zones in place. Let's start with this MD style, so MD for Market Delta style. And this gives us the classic edge zones where, let's have a look at the default conditions which we put in. So we look for 600% imbalance on 2 adjacent levels. Obviously, you can change all this numerical stuff as you wish. The key point is when we identify a zone, we paint it out, representing demand, and then if we close below it, we flip it supply. So we are only evaluating the edge zone based upon price. And this is probably, we got to talking about these inputs. This is probably as good a time as any to start to explain the emoji zone visualization modes. So within this example, and let's just move these windows out of the way a little bit so we can turn off the data so we've got something to reference. Sorry, let's just disconnect that. And let's concentrate on, let's get my pen as well, just bear with me. Annotate, draw. Okay, what we're going to do is concentrate on this imbalance here, the 2 stacked green ones. So what I'm going to do is bring up the settings for edge zones. And I'll start to change them so you can see the effects. Now, within the emoji indicators, anytime we find something in the order flow, so an edge zone is about aggression. We've got imbalances here that meet our 600% criteria across 2 stack levels. We regard that as a supply or demand event. In this case, it's demand. Yep. So the presence of a supply or demand event gives us the opportunity to start to visualize it in some way. And the visualizations we call emoji zones. Now we've got various visualizations, the simplest of which is nothing. So here we're putting our demand condition triangle below the bar. It happens because of this, but we're not doing anything else. The kind of classic market delta edge zone visualization can be created using dynamic mode. We'll hold back that for a moment. The next simplest is fixed projection. So here, we draw a zone out from the price levels where the event occurred, and this projects forward by the number of bars set within fixed projection distance. So here, we're going out across 1, 2, 3 bars. If I change that to 4, it's going to go on 1 more. If I change it to 1, it only highlights in the current bar. So you can use this just like if you want a quick alert that there's something there, but you don't want to consider the onward projection of what's going on. The next mode is extend the price until future intersection. So what this will do is we will draw lines from the highest and lowest price where the zones occurred. Now it immediately intersected. Let's see if we can, that's actually not displaying anything. Why is it not displaying anything? It might be just not visible. Let's tell you what, let's change this to 1 consecutive level so at least we can see some Here we go. So on the 987, you can start to see when we've got an imbalance, we project something out. And we've also got this text which appears. So if you're using this for multiple supply demand event types, you might want to say, well, this is EZ for edge zone. So now we have got a label that appears here, but it will also appear within the price axis when we've got an as yet untested zone. So if we were to scroll along here, we can see, okay, I know I've got a naked edge zone, if you like. I know I've got supply above me that's not retested. Maybe this is a potential entry or it's a stopping point on the way back up. So that's the purpose of extend until future intersection. Think of it as like a bookmark in terms of what you're doing. And then we can start to do the really neat stuff of these colored bands. And that's emoji zone dynamic mode. So in its simplest state, if we say dynamic visualization, price only, and we won't change states, and I'll start to amend these as we go on. What I now get, just so to calculate, okay, this is far too loose, we've got too many things going on. Let's turn this into 600 at 2. Here we go. So now, where I've identified this edge zone, I'm projecting forward until such point as we close below it. So because we're in price only mode, the candle has to close below demand or close above supply in order to stop the zone being drawn. Let's make some space just so we can see the interaction on here. So on this particular edge zone, it remained in force because none of these candlesticks actually closed below it. And at the point we closed below it, we stopped drawing it. If I wanted it to continue though, I enable dynamic mode state reversal. So if I say yes on dynamic state reversal, now you can see that at the point we closed below it, we've changed the appearance into supply. So you can start to understand potential retests on here. Okay? We'll come back to dynamic mode cycles in a moment. What we'll now do is let's look at the effect of evaluating on order flow rather than on price. So this is pretty simple. We've got new demand that happens here. We've traded, we've closed below it. It's become supply. We traded above it, bang, it ends. But it might have been nice to know at some point, was this going to break? We could see it hold, but there's not infinite demand at a level. And that's what the order flow evaluation option allows us to see. So if I change this into order flow evaluation, now as we trade along this level, we're evaluating how we're trading when we trade back at these price levels. So we start out in a state of new demand. We've had some aggressive trading that indicates new demand within the market. As it's retested, we're evaluating the order flow within the candles that have traded around these price levels. And if the nature of the traded volume tells us that the demand continuing, we show it's been tested. So we change the color from the new demand color to the continuing demand color. We also apply the continuing transparency level. So I've set that to 50, and I can set that to 80, and it should be a bit more transparent. But if it's looking like it's holding, we call it continuing demand or continuing supply. And we draw a line around it. So I've got a line that's at 3. Let's set it to 1. It's a bit tidier. So that allows us to see, okay, it looks like it's holding. Might be happy, continuing to buy at this level. Once we trade through it though, and the order flow implies that the demand has exhausted, we change the color to our exhausted color. The defaults are set to orange. Orange is kind of like a warning. And we set it by default 100% transparency, so we just get a box. Because if it's exhausted, who cares if it's supply or demand? What I just care about is this level was a level, but it looks likely that it's not going to hold. And by default, it's a dash, or even better, a dot. I take the view the less color we've got around the level, less substance, and the weaker it is. So we start out with new demands. When we first retest it, it becomes continuing demands if it seems to be holding. When it looks like it's going to break, it's exhausted demand. Sure enough, it breaks. Becomes new supply because we've reversed the role. I don't have to reverse the role. I can turn the state reversal to no, hit apply, and it ends after it breaks. But the cycle then continues, new supply, continuing supply, exhausted supply. Once we close above it, we end the cycle. Now, it's worth noting we may not do this in sequence. We will always move forward through a cycle, but we could certainly go from new demand to exhausted demand, or we could go from new demand immediately to new supply. If we have this and bam, we close below it, we're going to go straight to new supply. So we always move forward through this cycle of an emoji zone, but we don't necessarily go through consecutive steps. We can jump forward by a step or two. So John's asked, please let me know the difference between price only and order flow mode. Hopefully I've explained that. Anthony, do you think I need to revisit that or a bit more clarity?
No, but I think that was my most interesting take on it, or what I wanted to, have them explained most about it. I re-added because I didn't have saved it. Could you go up, show me your settings at the top? Yeah, scroll up to the top. You got it 600, no 002.
Yeah, so I'm looking for a 600% diagonal imbalance at 2 consecutive levels or more, and I'm not doing any filtering on the absolutes in here.
0, 0. Well, let's see. For some reason, I can't get the zones to come across on my settings here.
You've got the visualization mode, right?
Oh, probably not. But there we go.
Okay.
Got it off. I knew it was something I was missing. Again, when I had to click off, I didn't save it.
Yeah. So I'm pretty much from this point downwards, emoji zone visualization, everything relates to the visuals. So, there's a lot of inputs, but it's because we've got 6 states that we consider. So, we've got these multiple color settings. We've got transparency levels for each category of state. We've got line widths. So it looks like there's a lot. But once you start to understand, well, okay, when I've got an event, it can go through this cycle of 6 states. It becomes quite simple. And on the website, we give some examples and documentation that really explain, here's how zones are formed. Here's how you can change the visualization based on what's there.
Well, let me ask you this. Go pull it down. So it's showing us that it's support. Now question that support when it goes to a hollow dashed orange line.
Yep.
Question the whatever it's attached to, and this happens to be green support. Question it. Be careful.
Yeah, absolutely. And I did a video a while ago explaining this concept, and I think I called it, Are You Playing Russian Roulette? Trading Support and Resistance. Because you think about, 20, 30 years ago, we all read our technical analysis books, and let's try and draw this. People say, the more times we trade at a level, the stronger it becomes. And they show diagrams like that, yeah? But let's think about what's happening here. We've got this new demand that kicks off. That new demand is here. It's the existence of a level, and we know about it. If you think about what the TA books are saying, the more times we trade, the stronger it becomes. Well, at the point we're here, this is the first time we know we've got a level. Number 2, yeah? So our first opportunity to actually buy this level is here. At this point, if you're reading a chart, it doesn't exist. At this point, potentially it exists. This is the first time you can draw a line and project it into the future. That's the technical analysis trader's first opportunity to do it. And that assumes that whoever has kicked off this demand is going to keep buying and keep buying here. Now, how much buying power have they got? Infinite buying power. So I would contend, and we see it here, the more times we trade at a level, actually the weaker it becomes, because this guy, he's done his business. It depends on the time frame, of course, but he's not going to support this. If we trade here 85 times, he's not going to keep supporting it 85 times. And actually, I like to think of this more as, you put one bullet in the chamber of the revolver, you spin it, you pull the trigger. Well, okay, you've got the 1 in 6 probability of being unlucky. You pull it again. Okay, if you don't respin, you pull it again. Probability is getting worse and worse. So for the TA guys, how many times do you want to be buying this as the demand runs out? It's crazy.
How many times pull that trigger?
Yeah, the emoji zones actually tell us when the level's created, something's happened within the order flow. We know about it. We might be able to catch it, we might not, but we know about this. It allows us to consider trading back to it to see if the guy holds it, or when he does hold it, trading away from it. But the technical guys, they've got no chance until here. They need this to occur in order to draw their line. And then they're thinking, oh, the more times this line holds, the stronger it is. No, the more times this line trades, the weaker it is.
I've taught that for years, and it's great the way you said it because it reinforces it. And I'm to the point where you can't tell good stuff to people enough, because sometimes it takes, that different way of saying it gives people the aha moment. There's no.
It's getting into the market maker mentality, isn't it? If we can identify what's happening, we can read the volume. If we know we've got a buyer here, maybe we actually want to be going, okay, let's sell back to where the buyer is. I know where I can get out. Anyhow, preaching over.
Pull up your settings again. We'll just keep it on your screen because you got the same. Now, to that orange, that green.
Yep.
Sorry, the green turning to orange. What we're going through. That's all in what section of the settings?
It's here. So new demand, continuing demand, exhausted demand. So these are the basic colors for each state. There's my new demand. There's my continuing demand, but I set the transparency to 50%, continuing.
Got it.
And then for exhausted demand, I set the transparency to 100. I want it to be hollow. And then I set the line styles, and these are all the default settings. Yeah.
Okay.
The line for new is solid, but because the transparency is 0, the line ends up being the same color, so we don't perceive a line. Same thing on continuing. So we're drawn to what's here, but we can tell it's not new. It looks visibly different. And then the line for exhausted is dots. I don't think we actually need this to be a different, the color of this to relate to this. I
agree. It's an alert type of thing, but either way, it's user preference. If you bring your settings back up below the colors, below transparency, that word transparency, all of that's just your settings, right? The kind of lines you want, whether or not you want it transparent, all of that stuff. Above that, though, are 2 groups of 3. New demand, continuing demand, exhausted demand, and then the same for supply. Demand is buying or support, supply is selling or resistance. So green and red would be your default colors for those, and that is new demand just came in. Is it continuing demand? And then when it's exhausted demand, look out.
And we've been we've named this, supply and demand rather than support and resistance, really to reflect the dynamic of what's going on. I think the more people can, use the language that reflects actually what's going on in the market, right? What's support and resistance? It's relating back to our, Mercer technical analysis of the futures markets diagrams again, and horizontal charts. We have demand. We've got somebody aggressively buying here. Why are they buying? It's demand. So I think if we use the terminology and the indicators that really represents what's going on within the market, it helps your whole thought process. And, something I advocate is, when you read the story on the chart, actually, verbalize it in plain English. If you look at this, if we're, this is our hard right edge. If you say, I see that new demand has come in, we've traded through the level and the demand is continuing. If you're not sure what to do, but you actually speak it out loud in English, you pretty clearly get an idea of what to do.
What if you don't speak English like you? Broken English.
Oh dear.
Well, I know I speak from myself when I talk to other people. When I look at settings that have all this, it seems overwhelming. But when you break it down, that 3 of them are for the demand or support. The other 3 are for supply or resistance, and then the rest are just user preference, how thick or thin you want a line, and how transparent you want that.
Once you understand how these blocks are relating to each other in sort of subsections, this becomes quite simple. Yeah.
I think that we should do a webinar that we could just go over examples of how good and accurate or probable that these work, and how they are reading order flow for you, if not helping you read it.
Yeah, absolutely. And of course, it's going to depend on your time frame. If we've got a really quick chart and we've got quite loose settings within the indicator, you're going to get more false reads or whipsaws. But you start to run this on a flow chart with some significant volume settings, it can be really accurate. The more volume we're capturing in each bar to analyze, the more significant the levels are.
It's important to make sure your emoji visualization is set to dynamic, or you won't draw any lines.
Correct. Dynamic mode forms the basis for market delta style edge zones happening. Now, the difference between having the 6 states, so emoji style, or just 2 states, is price only versus order flow. If we go to price only, we get red and green. If we go to order flow, we're now qualifying the trading action after we've identified an edge zone.
No, that's the way to do it. There's no doubt. It only makes sense. That's right. It only makes sense to have that be the progression.
There's one more setting. I'll flag it. I don't think edge zones is necessarily the best indicator to use this setting on, but I'll explain what the setting is and why it's there. So we can see we've got this edge zone that appeared, new demand, continuing demand, exhausted demand, it broke, new supply, continuing supply, exhausted supply, and it broke. That is what I refer to as one cycle of an emoji zone. It started, it changed role, it ended. We've got a setting, dynamic mode cycles, and that defaults to 1. This can be really neat on longer term charts. On a shorter term chart, you can really start to kill the processing power on your machine. But if I set this to 2, let's see what happens and watch the end of this. This zone ended at the end of 1 cycle. I hit supply. At the point it ended, and we've got some other stuff coming in now, this was the candle that broke it. We now start it again as new demand. So we're happy for every cycle to go twice. I've put
twice. I was going to say forever. No, just twice.
No, just twice. And you can kill your computer if you use this on a really short chart with a really high number. It makes no sense. But start to do this on something like a 30-minute chart with some conservative settings here and set it to 2 or even 3, or play with this on the daily chart, and you really can see how levels that are generated during the day remain in play during the session or over multiple days. But, word of warning, don't use this on a fast chart with really loose settings, because your whole screen is going to go green and red, because every level is going to continue over time. It becomes meaningless.
And a cycle is new demand, continuing demand, exhausted demand. That would constitute, and then the other way, new supply, continuing supply.
Depending upon where it starts. So let me just bring up the user guide on the website that explains this. So within the user guides,
you had a chance to play it both ways once.
Yeah.
No way.
So we explain the emoji zone visualization modes within the user guide, including how they come about and how they appear. Okay.
Yeah, I like it. So, one question. Go ahead.
Yeah, that's the dynamic mode cycles. We've also got inputs for pullback, but I suggest we leave that for now, because that is a whole rabbit hole in and of itself.
All right. No, that's good. John says, please let me know the difference between price only or order flow mode. Should we leave that for another session?
Well, we've kind of gone through that a couple of times, but it's basically order flow gives us these 6 states. Price only, we only evaluate based upon close of price above or below a zone.
Oh, you did. Maybe this was an old question. I'm sorry.
Yeah. And it's one of those things, I think, you know, once you understand and you've experienced order flow modes, why would you use price?
Yeah. Bill, let's do that at another session. I don't want to cram everything into one session because a lot of the good stuff gets lost, but that's a great.
Yeah, pullback is deep, but it's worth a session on its own for sure.
Yeah. But no, there's another question about multi-time frame analysis, and I think we.
Yeah, and Christine's asked something as well. Let's just say, sometimes I have a red imbalance with a green edge zone extending from it. Is this because it starts as red, but when price starts? Yeah, almost certainly yes, Christine. So it's very possible that this candlestick, if we closed below this one immediately, it would convert to supply. So on the way up, we've got the aggression. It's going to appear green. On the way down, if we close below here, that's going to be red as an area of new supply.
Perfect. Let's end it there. I think we covered a lot of the settings for the edge zones, but I wrote down to look at multiple time frame as a future event, right? And
so that must have been last week's webinar where we were doing some clever stuff using zero prints actually, but we could probably put something together on edge zones. Yeah.
Raj says, you said there needs to be enough volume in a bar. Is this 4 tick reversal or 6?
This is 4.
It's 4. What's your question? You said there needs to be enough volume in a bar.
Yeah. So I trade off really slow charts. And you know, slower than yours, Anthony. For me, if I'm looking at a reversal, I'm typically using something like an 8-tick reversal. For my trading style, I like the idea that the move in the candle should be $100. So on CL, I'm using a 10 range or even 10-tick reversal, where 10 to use range on CL. On ES, I'm using an 8 range or an 8-tick reversal. And obviously, a slower candle gets more volume within it vertically. Now, you know, 4-tick reversal is reasonable because we know we're going to be at least 4 ticks long. It's a point. A point is important within ES. What I do struggle with is we have clients from time to time who are trading off, you know, 1 minute, 30 seconds, 3 range candles, and they say, I'm not getting very good signals when I'm using my 3 range chart on NQ. And it's because there's no volume in the candle. And it's counterintuitive to a lot of retail traders from a technical analysis background that they should slow their charts down and start reading the data vertically. Because what we care about is the volume that has transacted at price. Now, if we bounce up and down within this candle a lot of the time, we're understanding more and more about the price levels. If your chart's running too fast, you're actually distributing that volume horizontally, and really your best reads end up being the bar delta over time, because we're looking then at the aggregate of the volume across each horizontal slice. So in response to Raj's question, I certainly wouldn't go below a 4-tick reversal. I'm of the view you want as few signals as possible, and you want them to be the best ones. And if you start, typical, retail trader mindset, I must trade as much as possible. I need all these opportunities, so I'm going to speed my charts up to get closer to the action. To which my personal view is, you need to be able to get a good read vertically on the volume that's trading at price. And once you can see the patterns in the volume, you don't need to go horizontally. You can understand what's happening vertically. And you can play bouncing around between levels vertically without distributing this volume horizontally across your screen.
I hear you. I like it. Another way to look at the same thing.
Yeah, absolutely. And Peter Davis, he said, price doesn't move horizontally. It's a brilliant way of explaining the concept.
But yet all charts do.
Yeah.
Right? All charts will move horizontally. So
Yeah,
I mean that's what
in a prop firm, what are the guys doing? They're looking at their domes.
I was going to say that you're looking at. I mean, here for me, it's always a reference thing. You should have multiple
Yeah.
time frames, and then drill down into what do you see right now, and then qualify it.
Yeah.
That's what happens. And here's the other thing that happens with people: even if they don't want to trade a lot, they end up trading a lot because they can't control themselves. They see stuff, they chase the money. I'm finding from some personal coaching session I'm doing and getting closer to people's actual problems that, and I guess this isn't a surprise, but the root of all evil is when you start trading the money, thinking the money, trading the money. It's the root of all your bad trades.
It's psychology, isn't it? But it's trading is what, 60-80% psychology. If you can control the devil on your shoulder,
But
who's
it's
looking at money.
The 100% negative psychology is money, thinking of the money. That unleashes all the negative stuff from there.
I remember when, 20 years ago, when I started getting into this, I read the Alexander Elder book, Trading for a Living, which is, it's about TA, but he does have a good section on the psychology. He's a psychiatrist, and he made a comparison of trading to Alcoholics Anonymous and addiction. And he went through the 7 steps, 12 steps, I don't know, so I'm not an alcoholic. But he said once you realize that there is this potential money addiction, you come up with trading approaches and systems that are designed to stop you from trading. And only when you can pass all of the rules for possible trade are you allowed to enter the trade. And it's right. The money is the root of all evil on this. If you go to any professional, I think makes examples of a doctor. Do you want to go to the doctor who has a Porsche 911 outside his practice, or has got some leather-bound medical journals behind his desk? You go to the professional. So if you concentrate on being a good trader, the money comes. How much it is, it's going to be enough.
No, I hear you. Well, I think this was a good set. I don't want to go over an hour because we start covering too much. And then it's like, I like to break it down and say, okay, we covered all of these settings. And I think you start with the settings and you understand what the settings change and do. It's easier to understand the value of it. I popped in the chat rather, the link that you guys could go to that if you don't have this add-on for Sierra, we're only talking about this for Sierra charts. Lee's developing it for Ninja, but it's not going to be ready. So if you have Ninja, be patient. If you have Sierra or you're thinking of getting Sierra, click the link in the chat box. Not only to get it, but if you're, already have it, there's a lot of good information Lee has on emojitrading.com, and you can get there from that link. But just make sure that it's on Sierra. Understand that. Should be on Ninja Trader 7 and 8 shortly. I think that this has been something that price pressures. I think that Sierra charts has created price pressures that have made a lot of other $100, $300, $200, $500 a month services become too expensive. And those services, you don't get anything. They've been a much more for less platform. And so far, so good as far as connectivity and stability. It's software. So nothing's perfect. So far, so good with me. I haven't changed too many platforms throughout my career, and this has been pretty painless. So I really like this. This helped me understand the cycles, the dynamics, when to qualify and disqualify. You have to understand what that means. And now this is the helper to crack you in the head and say, if I didn't see it, now this is helping me see it. But Lee, thanks very much for coming, and we'll schedule something else in the near future.
Cool. Sounds good. I'll switch off my share, Anthony, and then it's back to you.
Perfect. Guys, we'll see you next week. I'll try to post this as soon as I can today and then put Lee on the calendar for another date in the future. Also, send me an email with some questions you might have, and then we could kind of organize the next event around those.
Cool.
All right, guys.
Okay. Bye
Thanks.
for now, guys. Bye.